Choosing where to set up a trust can make a big difference in how your wealth is protected, how easy it is to open a bank account, and how smooth your family inherits the assets in the future. The options are global, but not all countries offer the same level of safety, privacy, and banking access. If you choose the wrong place, your assets could end up at risk or hard to use when you need them the most. In this video, you will get a straightforward comparison of the world's top trust locations like Switzerland, Singapore, the Cook Islands, the Channel Islands, and Dubai. We will look at which one offers the strongest protection, which are the easiest for banking, and which are the most respected by international families and professionals. You will also see why Dubai is now one of the leading choices for modern, compliant asset protection and how it stacks up against classic offshore options. Before we start, my name is Shiraz Wahid and I'm the co-founder at Lepidus Wealth, where we have helped many of our clients and families with trust, foundation, and other asset protection strategies in Dubai. If you would like my help in doing the same, you can apply for a free and customized asset protection plan by clicking the link in the description below. So, what exactly makes a jurisdiction stand out for the trust? It starts with the strength of its legal framework. This includes how the courts protects the trust assets, whether local law recognizes and enforces trust, and how much flexibility you have in designing the structure. Some jurisdictions are famous for ironclad asset protection, while others are better for estate planning and family governance. Then there's the question of privacy and compliance. The old offshore world traded on secrecy, but today reputational risk and cross-border regulations needs compliance, reporting, and the ability to open and operate real-world bank accounts matter more than ever. The Cook Islands Trust, for example, have become legendary among asset protection specialists. Located in the South Pacific, this small jurisdiction offered trust with some of the strongest protection from foreign judgments in the world. If a court in the US or Europe orders a seizure of assets held in a Cook Island trust, local courts simply won't enforce it. The laws are designed to make it exceptionally hard for creditors or claimants to break in. You can add firewall provisions that protect assets even from aggressive litigations. But this strength comes with trade offs. The Cook Islands' focus on secrecy has made many banks hesitant. Opening a practical multi currency bank account is often a challenge, and the jurisdiction's reputation, while strong in legal circles, can sometimes raise questions with compliance departments and international banks. Switzerland remains a classic name in wealth planning, with a global reputation for stability, discretion, and world class banking. While Switzerland does not have a trust law of its own, it recognizes trust established under foreign law and administers them with rigorous professionalism. For families with deep Swiss ties or those who want their assets managed by Swiss banks or fiduciaries, this remains a premium choice. However, the era of total banking secrecy is over. Today, Swiss compliance is among the world's strictest. Every structure must be transparent with clear reporting to both local and home authorities. Next on the list is British Virgin Island. The British Virgin Island, known as BVI, is another major player in the international trust planning. Their trust law is based on English common law, and local courts have a strong track record of upholding settler intentions. The BVI Trust is especially popular with entrepreneurs who want to retain direct control over company shares held by the trust. Privacy is good and setup process is streamlined. However, BVI's reputation has changed in recent years. Banks and regulators now require full transparency, and negative headlines about offshore havens have prompted some families to reconsider whether BVI remains the right fit, especially for onshore banking and compliance. Guernsey is a British Crown dependency that offers some of the most respected trust regimes in the world. The Jersey Islands have decades of experience, well-developed legal framework, and a high standard of professional administration. Trusts in Jersey are recognized globally and work well with all major international banks. For families with UK links or European assets, these jurisdictions provide both flexibility and peace of mind. That said, they are not low cost, and increased regulatory scrutiny in Europe means ongoing compliance is essential. Now, next on the list is Singapore. Singapore has rapidly emerged as Asia's top choice for trust and wealth structuring. With its reputation for stability, world class financial services, and a robust legal system based on the English common law, Singapore offers excellent environment for family trust. It's especially popular among Asian entrepreneurs and international families with assets or operations in the region. Singapore's trust law is modern and practical and offers both asset protection and flexibility in succession. Privacy is balanced with strict compliance, and most major international banks are happy to open accounts for Singaporean trust. This blend of East and West has made Singapore a powerful global alternative. But it's important to note that regulators in Singapore take tax and reporting seriously. This is a fully above board jurisdiction. Now, here I want to discuss a major point, that is classic offshore jurisdictions versus onshore compliant solutions. In the past, many chose the far flung islands or secrecy jurisdictions to hide assets. Today, that approach comes with reputational risk, practical banking hurdles, and sometimes legal trouble. Authorities worldwide are sharing information, banks are turning away structure that they can't fully understand, and asset protection can only work if you can access and move your wealth as needed. This has led many to rethink where and how they set up trust. Now let's discuss about Dubai. Dubai has become a standard choice for those who want real protection, international recognition, and practical banking access. In particular, Dubai's International Financial Center, that is DIFC, has introduced a modern trust regime based on English common law with clear and internationally accepted structures. The DIFC trust law is robust and the court system is independent, English speaking, and recognized by global institutions. This means if you set up a trust in DIFC, you can rely on a legal system that understands international business, respects settler intentions, and it is not subject to risk and uncertainty of purely offshore jurisdictions. For high net worth families, there is another advantage of setting up a DIFC trust that allows you to work directly with major banks in Dubai and abroad. Compliance is clean and transparent, banking partners understand the structure, and you don't face the red flag problems that comes with classic offshore trusts that are based on secrecy. Inheritance planning is simple and you can integrate local and international assets in a single unified structure. In fact, many international banks now prefer dealing with DIFC and Singapore Trust over older secrecy based jurisdictions. But that's not all. Dubai's trust ecosystem is complemented by the DIFC's foundation structure, a civil law alternate that works especially well for clients from Middle East, South Asia, and Europe who want succession and control without some of the complexities of a traditional trust. The foundation can own companies, hold property, and serve as the legal owner of family wealth, while a trust deed manages the family wishes. This offers even greater flexibility for those who need tailored governance or want to involve multiple generations in family decision. Naturally, every jurisdiction comes with its own cost and procedures. Setting up a trust in Cook's Island or BVI can be cost effective, but ongoing administration and finding practical banking can be challenging. Switzerland and Cayman Islands solution are premium priced, but you get unmatched professionalism and strong banking links. Singapore and Dubai are competitive on cost, but what you're really buying is peace of mind, clean compliance, international credibility, and the ability to actually access and use your wealth globally. One important point to keep in mind is the tax. Not every trust is tax neutral. The Cook Island, BVI, and Guernsey can be structured to avoid local tax, but you must still comply with tax laws in your home country. Singapore is a tax efficient jurisdiction, but not tax free. Dubai offers 0% income tax and no local inheritance tax, but again, global transparency means you must plan carefully with your advisors to meet the reporting obligations to wherever you reside and hold the tax residency. For many global families, asset protection remains a key driver. The strongest legal firewall are still found in places like Cook Islands, Nevis, Belize, where the courts will not enforce foreign judgments. But if you need to bank with a top tier institution or want a structure that is respected and not simply tolerated by regulators and partners worldwide, Dubai, Singapore, and Channel Island are now representing the gold standard. Clients often ask that whether a trust will actually protect assets if they are sued. The answer depends both on the jurisdiction and the structure. If your primary concern is litigation risk, Cook Islands and Nevis are still the strongest. But you need to remember that actual protection is only as good as your ability to use the assets. If you cannot open bank account or if every transaction is delayed by compliance checks, the protection is academic. That's why more families are choosing Dubai and Singapore, where protection, access, and reputation comes together. Succession is another concern. If you want certainty that wealth will pass smoothly to the next generation, the clarity of English common law, as seen in DIFC and Guernsey, is invaluable. Swiss administration is excellent but relies on foreign law for trust itself. Singapore again stands out for Asian families and those with global footprint. In practical terms, setting up a trust in Dubai usually takes 2 to 4 weeks, including regulatory checks and documentation. Singapore is similar. The Cook Island and BVI are typically faster, but ongoing administration may be less convenient, especially if you're managing assets globally. Cost can vary significantly. Dubai and Singapore have transparent and moderate fee, while Channel Island and Switzerland are premium markets. But the key is not just the price, it's what you get in return, that is, real asset protection, practical banking, and structures your family can rely on for decades to come. So, when comparing the best places to set up a trust, the most important factor are legal strength, global reputation, compliance, and banking access. The day of hiding money are over. The future belongs to families who use clean, respected structures that are as practical as they are protective. If you're building or preserving wealth for the future generation, there has never been a better time to look beyond the old offshore world and embrace the solution that truly works for today and the years to come. If you own a business or real estate, don't wait for legal or health crisis to start thinking about protecting your wealth. Many people think asset protection is only for ultra wealthy. But the reality is that some of these solutions cost as much as setting up a free zone company in Dubai. If you want to secure what you have built and ensure your legacy, you can request your free and customized asset protection plan by clicking the link in the description below. And if you're serious about building long-term financial security, you should really check out my next video right here.